Joining us from New York on his Sunday evening is Boris Schlossberg, who's the Director of Currency Research at GFT. Boris, thank you for sharing your time on your weekend. What about the euro right now? And what's happening with the EU finance ministers meeting? I mean, they have a tight deadline, 1.5 hours to go, because they want to hammer out this deal before the Asian markets get underway. Do you think they'll be able to meet that deadline?
They do. It's hard to say. Apparently, Germans are still having some difficulties, but they're the ones that are resisting some of the key issues on the deal. But I think at this point, there is pretty much a concerted effort on all of their parts to come to some kind of a deal. They understand the markets really need some sort of reassurance. It was a very, very serious collapse last week, and they need to come back and reassure the market at this point. Euro is up. Risk is clearly up all across the board right now in anticipation of some kind of a deal being done before the markets open.
Okay, what kind of deal do you think we'll get at the end of all this, Boris? I mean, $500 billion in a lending facility. Do you think that's enough to reassure markets and investors right now?
I think it may be enough for a bounce. I mean, one of the things that's happening right now is that we've had so many people short the euro. It's been such a crowded trade that it's very necessary for the late shorts to kind of get punished a little bit, and we have a little bit of a short covering rally. That having been said, I think 130 still remains a very key resistance level on the euro, and I wonder how much confidence the market will have to take it up beyond that level at this point. The big issue outstanding right now is still what's going to be done about all the upcoming debt, not just the Greek debt, which at this point looks like has been taken off the table at least for the next 2 years because the IMF deal has been done. But we have a huge amount of maturity coming up in Italy, huge amount of maturity coming up in Spain, and all of those debts are going to start to really begin to impact on the market unless there is some sort of facility to be able to refinance that debt perhaps internally. So ultimately, I think the market really needs to see that the ECB is going to be willing to monetize some of this debt in order to be fully reassured that they can control this issue.
Yeah, so it sounds like more money printing taking place there in the Eurozone. Boris, how confident are you on the euro? We're seeing it bounce back, as you said, some short covering right now. But, you know, you have calls for 110, maybe 118 versus the USD in the near term.
Well, I think even in the best case scenario, it's clearly going to be negative for the euro for quite a long time, because if they sort of engage in this quantitative easing strategy, which is the one rescue method that could possibly work, it's clearly negative and dilutive to the currency as we go forward. But it may preserve the currency. One of the key problems that's been happening is the market is losing so much confidence, and there is so much fracture going on in the union that there is a very serious risk for the first time since it's been created of real fragmentation in the Eurozone, of euro actually possibly blowing up as a currency. That certainly is something that I think none of the European leaders want to see. So in the long run, I do think that ultimately this is a negative factor for the euro, even in the best case scenario, and we probably could see 120 as the year progresses. But for the meantime, we may have a little bit of a bounce, at least probably to 130, just on a short covering basis. It looks like we're going to have a gap opening. One of the interesting things about the currency markets is that almost every single gap opening we've had on Sunday has never really held. It's been come back and filled. The big thing, I think, is going to be whether it can come back and hold the levels of last week. If we hold around 127, 128, then perhaps we've found some stabilization. As Paul said earlier, credit spreads, absolutely the single critical most important factor to euro's stability going forward. If the credit spreads can stabilize and begin to shrink, that will be positive euro. If the credit markets still disbelieve the current policy factors, then the euro simply continues to go down.
Okay, Boris, let's quickly highlight the U.S. dollar and yen cross, because you said this is probably the defining cross for the markets right now. In fact, I think that precipitated that program selling that resulted in that 1,000-point drop on the Dow Jones Industrial on Thursday.
Exactly. I mean, yen itself, both dollar yen and euro yen, are very, very important in the currency market because they're risk funding crosses. And a lot of risk trades, including oil, including currencies, including equity, sometimes are funded through the yen because it's the lowest yielding currency in the world. So when it unwinds, when yen starts to strengthen, it's very, very negative for all the risk trades. And that's why you saw this sort of a cascade of selling orders happen on Thursday that really brought everything else down across the board. It was essentially a trade that started in the currency market and then completely precipitated itself all the way across all other asset classes. So we have to watch that very carefully. And as I noted earlier, dollar yen below 90 is extraordinarily negative for the Japanese economy. So I think the Japanese, both fiscal and monetary officials, are going to do everything in their power to try to make sure that that cross stays up above those levels, because otherwise the exporters in Japan begin to suffer very greatly. So we'll be watching that very carefully. Unfortunately, there's very little, unless we have a completely concerted intervention between, let's say, the Fed, the BOE, the BOJ, and the ECB in the currency market, that they can do individually to stop a collapse to the downside. Once the market decides that there is very little possibility of a significant European stability, then I think you're going to have another speculative run at the euro, and it's only a concerted effort by the central banks that could possibly stop it.
All right, Boris, thank you for illustrating it for us. Cascade of selling orders, very nice touch. That's Boris Schlossberg of GFT.